All right, let's get right into it. In this video, we are going to unpack the core day trading model, straight from ICT. Hey everyone, welcome to AI Explains ICT. So, this video is going to be a deep dive into the core content from month 8, episode 1. And listen, this whole month is about one thing, day trading. So you're probably going to want to grab a notebook and a pen because we're about to get into the real essentials here.
So let's be real. How many times have you heard that day trading is a fool's game? That it's basically just gambling? Well, what if I told you there's a framework, a real structure for navigating all that chaos with precision? That's exactly what we're going to break down today.
All right, let's jump right in. First things first, we need to get super clear on what we're even trying to do here. What is the actual fundamental goal of this specific style of trading?
Okay, so the main goal here is pretty simple. We're trying to capitalize on the opportunities that pop up within a single day's range. We're not talking about swing trading or holding for weeks or months. Nope. Our entire focus, our whole world, is right here inside this single daily candle.
Now, this is a huge point, so listen up. Day trading does not mean you trade every single day. In fact, that's a great way to lose money. This model is all about patience. It's about waiting for those A-plus high-probability setups to come to you. You know, you might see a couple of good ones a day, but honestly, some days, there's just nothing there, and that's okay.
So, what are we shooting for exactly? Are we trying to nail the absolute top and bottom of the day? No way. The goal is way more realistic. It's to consistently grab the big chunk in the middle. That's 65 to 70% of the daily range. We're happy to leave the scraps at the top and bottom because we're playing a game of probability, not perfection.
Okay, so that's the what. Now for the how. How do we actually find these opportunities? Well, it all boils down to a very structured four-part analysis. Think of these as the four legs of a table. They support every single trade idea.
And here they are, the four pillars of the whole model. It's a top-down approach, right? We start with the 30,000-foot view, higher time frame institutional order flow. Then we zoom in a little to the weekly directional bias. Then we get even more granular with the day of the week profile. And finally, we get down to the minute looking at the time of day. Each step is like a filter, and what's left is our high probability setup. And yes, you absolutely have to follow them in this order. No skipping steps.
Pillar number 1 is, without a doubt, the most important. It sets the stage for everything else. Here, we're looking at the big picture, the daily, weekly, even monthly charts, to find these key zones of interest. ICT calls them PD arrays, but you can just think of them as magnets for price, places where you'd expect a big reaction. Our entire job here is to figure out, is the market expensive right now, what we call a premium, and likely to drop? Or is it cheap, a discount, and likely to go up? This one pillar tells us where the big money is probably headed. All right, now let's talk about pillars 3 and 4. These two are all about timing. And let me tell you, in this model, when you pull the trigger is every bit as important as what you're trading.
You see, every day of the week kind of has its own personality. Mondays, they're often quiet, maybe setting up the move for later. But Tuesdays are huge. There's a 70% chance that the high or low for the entire week gets put in on a Tuesday. Think about that. That makes Wednesday a fantastic day to trade because you have all that context. Thursday's also pretty solid, but you got to watch out for potential weekly reversals. And Fridays tend to wind down, unless, of course, the market still has some unfinished business from earlier in the week.
And it gets even more specific than that. We don't just trade whenever we feel like it. We focus on specific windows of time, what ICT calls kill zones. These are times when the market is most likely to make its big move for the day. And these are all in New York time, by the way. You've got the London Open from 1 to 5 a.m., the New York Open from 7 to 9 a.m., and the London Close from 10 a.m. to 12 p.m. These are our hunting grounds. Outside of these times, we're mostly just watching. Okay, now for what is maybe the most mechanical part of this whole model. This brings us back to pillar number 2, the weekly directional bias. This is the tool we use to figure out which way we should be looking to trade for the entire week. And believe it or not, it all comes down to one single price, the Sunday opening price. Seriously. And hey, if your charts don't show Sunday, don't worry. The Monday Open works just fine too. We draw a line at that price, and that line becomes our North Star, our main reference point for the entire week.
So here's how we use that line. It's super clever. If we're expecting a bullish week, we actually want to see the price dip below that opening price early in the week. This is what's called a Judas swing. It's designed to fake out the sellers right before the real move up. As long as we stay above that open for the rest of the week, we're only looking for buy setups. And it's the exact opposite for a bearish week. We look for a quick pop above the open to trap the buyers, and then as long as we stay below it, we are only looking for sells. Simple, right?
But, and this is the most important but you're going to hear, there's a huge caveat. This simple rule is not absolute. It works until price runs into one of those big, higher time frame levels we talked about in Pillar 1, a major discount level or a major premium level. When that happens, the game changes. The big picture overrides the simple rule. This is the secret sauce.
Okay, so all of this sounds good in theory, right? But let's see how it plays out on a real chart. We're going to look at an example that really highlights how these rules, especially that big caveat, all fit together.
All right, take a look at this. On the right side, you see the hourly chart. Price is clearly trading below the Sunday open. So our simple rule says look for sells, right? But hold on. Now look at the daily chart on the left. Where has price just traded down to? It's hit a major discount zone. It's tapped a bullish order block and filled in a fair value gap. Basically, it just ran into a huge potential support level. So, we have a conflict, right?
So I'll ask you directly. The simple filter is screaming sell. Why would that be a terrible mistake right here? What's more important?
And here's the answer, straight from the man himself. ICT says we cannot be a seller in this particular setup because we traded down into a fair value gap relative to the daily chart, and we have that daily discount bullish order block. And there it is, the higher time frame context. Pillar 1 always wins. That big support level from the daily chart overrules our simple little weekly filter. It's signaling that the selling might be over, for now.
Okay, let's boil this all down to the absolute must-knows. First, the goal. We're not chasing perfection. We want that fat 65–70% slice of the daily pie. Second, the framework. You have to use all 4 pillars in order every single time. It's your foundation. Third, the filter. That Sunday opening price is your simple guide for the week. But fourth and most importantly, the golden rule. The big picture, those higher time frame PD arrays, will always trump the simple filter. That right there is the key to staying on the right side of the market.
So, if this breakdown helped you get a better handle on the core concepts, do me a favor and hit that like button. And of course, subscribe to the channel so you don't miss out on more deep dives into ICT's material.
And hey, if anything wasn't totally clear, or you just have a question, seriously, drop it in the comments below. A real human reads them all and will get back to you.
All right, that's it for this one. Thanks for tuning in. And until next time, trade safe out there.